Hello, everyone. Again, my name is Stephen Rizzetta. I'm the Renovation Lending Manager here at REMN Wholesale, and I will be presenting Renovation Lending 101 today. I look forward to giving you a brief introduction to the world of renovation financing. So without further delay, let's get started. All right, the very first thing we need to go over is today's agenda. What is a renovation loan? That's the first thing on the list. Then we'll go over the benefits, process flow, determining loan amount, what programs we offer, and how do you get started on your first reno. If at any point during this presentation you have questions, please email them to us at webinars@remn.com. You can also put your questions in the chat feature. So, what is a reno loan? Well, it's simply put, financing for a purchase or refi plus the renovation costs all in one loan. Okay, so that's all in a single closing. So again, it's the purchase price plus payoff plus your improvements all in a single loan. That means that you close the loan and then we start the work. So if you're already familiar with your standard Fannie Mae, FHA, or VA income and credit conditions, you will be halfway there on this type of loan. The only thing new that you have to learn is the non-reno condition. So once the work begins after closing, that's when you're out of the picture. That's when you get paid and REMN's draw department handles the escrow. All right, so there's two really key advantages of a renovation loan over your standard financing for renovations otherwise. Hard money loan, personal loan, and credit cards, they all have higher interest rates and shorter terms. A renovation loan, however, offers competitive Fannie Mae, FHA, and VA rates at longer, more flexible terms. Your cash outs and home equity loans, those are based off of as-is value, whereas your renovation loan is based off of after improved value. That means that if we're basing our loan amount off of after improved value, we can finance a whole lot more. So let's talk about the status of the economy right now. Well, people aren't moving and buying new homes as much. Last year, 2018, we actually had a record spending on renovations and remodeling projects of $336.9 billion, up 7.4% from 2017. And this trend is projected to increase in the upcoming years. So renovation loans are here to stay. There's a lot of money to be had in these types of loans. And there's also a few other reasons why renovations are on the rise. The average age of U.S. homes is 40 years old. That means there's a lot of updates and modernization projects projected in the future. We also have a lack of affordable new housing inventory. And people are moving less. The older generation is staying put, as well as HGTV. There's a lot of shows on there, Fix Her Up or Flip This House. Those are empowering people to improve rather than move. So let's talk about some of the benefits of a renovation loan to all the parties involved. We have borrowers, real estate agents, contractors, and most of you on this call today, mortgage brokers. For borrowers, we can add value and build equity to a home. We can make the home of their dreams. And if they find a great neighborhood, but an imperfect home, they can fix it up with a renovation loan. Real estate agents, we can move aging listings a lot faster. So all those homes that people aren't really looking at, we can move them a lot faster by showing them the potential of the home with a renovation loan. Contractors, well, now your borrowers are able to afford bigger projects. So you're able to make more money as a contractor. And if you do a good job, your referrals will increase from real estate agents and your mortgage brokers. And it goes both ways. If you're a mortgage broker, you'll get referrals from contractors as well. As a mortgage broker, this is a great product to differentiate yourself because it's a specialized program. It's a great solution to fix appraisal issues. And because you can increase the loan amount with additional renovations, you can increase your commissions. If your first loan is a purchase, if the rates are in line, you can have the potential of a second refi loan. All right, so now let's talk about the process flow. Well, first we're going to start off, is this a purchase or refi? On a purchase, you're going to do the same purchase contract you would do on a normal loan. 45 days minimum on your first rental loan. If it's a payoff, refi, we're going to get the payoff. And then we'll choose the program. So discuss with your AE, is this going to be a 203K limited, 203K standard, HomeStyle, or VA Reno? And then we're going to send the borrower out to find a contractor. That contractor will put together a bid, and we'll get a dollar amount to plug in our max mortgage worksheet. Will help us determine the loan amount. That contractor should be licensed, insured, and experienced. In certain circumstances, we will ask you to hire a HUD consultant, which is an independent third party. Those HUD consultants are needed on work on a 203K above $35,000 and on a HomeStyle above $15,000. Also, for any work that's structural, we will need a HUD consultant. From there, again, we structure the max mortgage worksheet, which will spit out a loan amount, from which we can plug into our 3.2, run DU, make sure all the numbers work, we get our approved eligible, and then we can submit the file. And in 24 hours at REMN Wholesale, you will have an approval.
Steve, I just have a question for all those who may not have done a renovation loan in a long time or never done one at all. What's the time frame that I should expect as a loan officer from the time that I start this process until the time that I can actually submit my file to REMN?
So that's a great question, Carl. It really depends on how fast the borrower can obtain a contractor's bid. If it's a purchase, you don't have that much time. The seller does not really care what renovations you're doing to the house. On a refi, you have the luxury of time on your side. The borrower can spend as much time as they'd like finding the contractor that they want to proceed with. After we submit the file and get an approval, we're going to order the appraisal. And what you do is you provide the AMC or the appraiser with the contractor's bid. That appraiser will go out to the property and come back with an after improved value. Then we'll go clear the conditions. You'll have your non-reno conditions, which you're all familiar with. And then you'll have your new reno conditions, which your AE and myself at REMN Wholesale will help you learn. Then we'll close the loan and we'll go to post-closing where you guys are out of it. You've been paid. Everybody's been paid. And our renovation concierge desk will take over. They place a call to the borrower, contractor, and HUD consultant, get them all on the same page, and then the draws are dispersed to the contractor. Once all the work is complete, we close out the escrow account, and if you're lucky, you'll get a second loan if you just did a purchase. So now let's talk about the roles involved with a renovation loan. You have your contractor, HUD consultant, and REMN draw department. Contractor is fairly simple. They just need to be licensed, insured, and experienced. The HUD consultant, this is an independent third party who works with the borrowing contractor and does a feasibility analysis. This is basically your traffic cop on this type of loan. They'll ensure that the contractor's numbers are in line just in case we have to fire that contractor or something happens to that contractor and they cannot complete the work. We need to make sure those numbers are in line with other contractors' numbers in the area.
So Steve, you brought up an interesting point there with as far as being able to complete the job that for some reason the contractor goes away, disappears, the borrower fires them. So from what you're saying, you really shouldn't be necessarily, as the homeowner, not necessarily looking for the cheapest bid. You're looking for somebody who's legit. Because otherwise, we're not going to let them. They're not going to be able to complete the job.
That's correct. If it's a low-ball bid, if something happens to that contractor, we're not going to be able to rehire someone at that same cost. So it's important that we have this HUD consultant double check the contractor's numbers. And basically they will oversee the project not only on the front end, but once we get to post-closing, they'll also handle all the draw inspections. So what's great about a HUD consultant is they're independent and they want to make sure that the borrower gets the work done properly. So that means the contractor is not getting paid until the HUD consultant inspects their work. And again, the HUD consultant is only needed on a 203K standard over 35K worth of work and a HomeStyle over 15K worth of work, and anything structural in nature. And lastly, we have our REMN draw department. You guys really won't need to be involved with that department because these guys take over post-closing and they work with the contractor and the HUD consultant to facilitate the draws. And each program handles those draws differently. Speak to your account executive for more details. So now let's talk about a little bit of renovation math. You have your purchase price on a purchase plus total renovation costs times your maximum LTV equals your loan amount. So in this example, we have a $100,000 purchase price plus $50,000 in renovation costs for a total cost of $150,000. When we multiply that times our 96.5 LTV on a 203K, we arrive at a loan amount of $144,750. That means our down payment is $5,250. So it's important to remember on a purchase, your down payment is not based on solely the purchase price. It's purchase price plus improvements. Now on a refi, we take our after improved value times our LTV equals our loan amount. In this scenario, the appraiser gave us back a $200,000 after improved value times our 95% LTV on a Fannie Mae HomeStyle equals $190,000. We have a $100,000 payoff plus $50,000 total renovation costs, $10,000 in closing costs equals a grand total of $160,000 in total costs. Our max lending amount is $190,000, which is greater than our total cost of $160K. That means this borrower can bring in no money to the table. That's huge. So let's break down the total renovation costs. We have another example where a contractor's bid is $200,000. And we're always going to put a contingency on every deal. This is just in case money. Just in case the loan closes, the contractor pulls back a wall and sees some other necessary work that needs to be done.
Steve, can I ask you a question? What if everything goes to plan? Contractor comes in, they do the work, you know what, there's no overruns or any of that kind of stuff. What happens to that contingency money?
Great question, Tony. That contingency money, if not used, gets applied towards a principal reduction to pay down the loan amount. So that contingency varies on deal to deal from 10 up to 20%. Then we can also finance in permits, architect plans, and the HUD consultant fee. Remember, the HUD consultant, that third party we discussed, they get paid prior to the loan closing. So if the loan doesn't close, they want their money. But the really neat thing is we can finance in that $1,000 and your borrower can get refinanced or reimbursed that amount after closing. So we will cut a check to the borrower for $1,000 if they choose. We also finance in the inspection fees. In this case, we have $1,000 there. That means every time the HUD consultant goes out to inspect the contractor's work, the HUD consultant's getting paid. And lastly, this is really cool, we can finance in up to 6 months mortgage payments. So let's say we're doing a $200,000 job here, and the borrower cannot live in the home for 6 months. Well, we can roll in those mortgage payments.
Steve, who makes that determination? Who figures out whether or not the house is going to be inhabitable during the renovation period? Like, who makes that call?
So the HUD consultant would make that determination. On their report, they will say how many months the home is uninhabitable for. So if, for example, they come back and say the home is uninhabitable for 2 months, well, then we can only roll in up to 2 months mortgage payments. So now let's talk about the renovation options that we have here at REMN Wholesale. We have 4. The 203K Limited, the 203K Standard, the Fannie Mae HomeStyle, and new to the block, VA Reno. Diving in a little bit deeper, on 203Ks, those are limited to primaries only, 1 to 4 units. 96.5 LTV on a purchase, 97.75 on a refi. On Fannie Mae HomeStyle, we can do primaries up to 97% when stacked with a home ready. That's right, if we stack a HomeStyle with a home ready, we can go up to 97%. If you're not familiar with home ready, that's for low to moderate income borrowers. As long as you get the approved eligible at 97%, we'll allow it. We also allow second homes and investment properties. So you can do a 1-unit investment property with the Fannie Mae HomeStyle. That means you can do fix and flips, fix and holds, it's really booming on our side. We're seeing a lot of loans for investment properties right now. It's a great alternative. Then we have VA Reno, which currently we only allow on purchases, primary purchases, 1 unit. We go up to 100% LTV on both the purchase price plus the renovations. All right, now let's dive into what work can be done with each program. Well, 203K limiteds are really for smaller cosmetic projects with a limited budget. That means we can go up to 35K in total renovation costs. The second we go over 35K, we flip it to a 203K standard, and we need a HUD consultant. On a HomeStyle, we don't need a HUD consultant under 15K. Over 15K, we do. On a 203K standard, there's no maximum repair amount. You just have to stay within the county loan limit. On a HomeStyle, we limit you to 75% of after improved value for the amount of renovations that you can do. All 3 of these programs, after closing, the contractor has 6 months to complete the work. On a VA Reno, we only allow the contractor 3 months to complete the work. And there's never, ever a HUD consultant involved. That's because on a VA Reno, we only allow for minor remodeling and non-structural work. All right, so let's talk about some of the eligible renovations. And this really varies per program, but we have a generalized list here on the screen. We can do roof work, siding work, foundation work, plumbing and electric, flooring, kitchen and bath remodeling, painting. We can even finance in appliances. So if your borrower wants to purchase a home and put in a new refrigerator, new stove, we can finance it with a renovation loan. Other cool things, decks, patios, porches, and really anything structural. A more comprehensive list can be found on our website, or you can ask your AE.
Hey, Steve, quick question for you. On the appliances, you mentioned that earlier. Is that restricted to kitchen appliances? Like some major appliances, like you had mentioned, refrigerator, stove? That doesn't trickle over into things like washers and dryers and that type of thing, does it?
Actually, Tony, glad you asked that. On a 203K, you can finance in washer and dryers as well.
I did not know that. Okay.
On a Fannie Mae HomeStyle, you cannot. So there is a difference. So again, ask your AE. get your AE to get you in contact with me, and I can walk you through which renovations are allowed on which programs, but each varies. I've highlighted a few items here that should jump out to you. If you saw one of these items on the screen should jump out and you can say, I can sell that, or I can sell a lot of that. So high balance loan amounts, we allow them. So you could do $1 million renovation loan in certain high cost areas. We allow for renovations on mixed use properties, just not the commercial unit. We allow renovations on manufactured housing. We can build ADUs. So for all you people out there in California with the recent law changes, this is huge. You really need to get into this because this is a big money maker. You can get a lot of deals on this right now. We can also build attached and detached garages, and we can also build additional units, or maybe even add a second floor. So if your family size is increasing and you don't want to move, why not just build a second floor on your existing property? Another huge item in California, solar energy financing. So we can finance solar panels. We can also pay off PACE and HERO loans for already completed energy efficient projects. We don't do new construction with rental loans, but we can finish certain new construction projects. On Fannie Mae, we allow finishing of new construction on 90% or greater homes. On a 203K, we allow you to rebuild a tear down, right? So this is a technical way around new construction. As long as we are building off the current foundation on a 203K or expanding the current foundation, we can rebuild a home.
So that's, that's an interesting distinction that you make there, because I've always had that in my mind of, what is the real difference between a renovation loan and a construction loan? And what I guess you're talking about is really you're building off of an initial footprint. There had to have been a property there in the first place. You can do pretty much whatever you want, right? But you're still building off that initial footprint. Am I interpreting that correct?
That's correct. As long as you're building off of that initial footprint, we don't consider it new construction. But if you're removing the existing foundation and starting from scratch, that's new construction, and we can't do it with these programs. We're usually the hero on a lot of these unfinished, incomplete projects. Borrowers will come to us all the time and say, I tried to do this project on my own, and I couldn't complete it. I ran out of funds. So we'll get a lot of deals where we become the heroes and finance the rest of the project to completion. We can also install pools, which, depending on the area of the country you're in, could be really huge. You're getting conventional pricing on pools, which is it's a huge benefit because pool financing out there is sometimes in the high 20% range.
And you're also getting to finance it over up to 30 years, which makes it a lot more realistically affordable for the average person. And we also allow for do-it-yourself repairs. All right, so now that we've talked about renovation financing, let's talk about why send your deal to REMN. Well, just like any other loan that you send to REMN, we offer 24-hour initial underwrites on any renovation loan. We also have the most experience in the industry. We funded the most volume on renovation loans in 2018. And we have the best support staff. All our A's are well-versed in renovation. So are the assistants. Shout out to the assistants. Shout out to the help desk. We have a chat feature where you guys can just send your renovation questions and they'll help you instantaneously. We also have a renovation concierge desk, which again, you won't deal with because they're on the post-closing end. Marketing-wise, we offer top-notch marketing
through our portal, Flyer Paradise. This is where you mortgage brokers out there can put your name and logo on our customized rental flyers. So now you're ready to get going, and this is your first reno. Where do you start? Well, we don't want you to think too much. We just want you to get a few numbers and then call your AE. You're going to get a ballpark idea of the work. So what are they doing? Are they adding a second floor? Are they remodeling the kitchen? Are they fixing broken steps, broken windows? What are they doing? Then get an estimated dollar amount. Is it 10 grand, 20 grand? What are they thinking? They may even have a contractor's bid in hand already, and it might have an actual dollar amount. And lastly, get an after improved value. Well, once I put in this $50K worth of work, what's the value of the home going to be? That's very important. And once you have all those numbers, don't think too much. Call your AE. Call me. We'll help you the rest of the way, and we'll guide you on your first one. So at this point, I'd like to thank you guys for attending today's webinar, and I'd like to invite you all to take some action by emailing us at webinars@revn.com. Any of your scenario questions, if you're looking to get set up with our flyer system, Flyer Paradise. If you need a contractor list in your area, please email us. Or if you want to set up team trainings or one-on-one follow-ups, we can do that as well. If you forgot who your AE is, or you need a new AE, or you're just getting signed up with us, please email us as well. Or anything else, just email us. And lastly, please connect with me on LinkedIn. You will see updates, sales tips, and any renovation news in my feed.
So Steve, I appreciate all the knowledge that you just went over for everyone. I just want to make one point that Steve brought up, and that is just as important it is on the front end, meaning to get that loan processed correctly, to get that loan to the funding table for a satisfied customer. I think it's just as important after the fact, once that loan closes, that it's a smooth transition, that you're not going to be getting phone calls, complaints, things aren't being done properly, that you have to be, we're very well versed in making sure the post-closing piece works very well as well, because obviously your referral partners want to continue the process and deliver you more loans and referrals. I'd like to just, we have a load of questions coming in, and I appreciate that. We're probably going to be able to get to a few because of time constraints, but we will be sending anyone who registered for this webinar, we will be sending a recorded version along with the Q&A after the fact. So give us about 24 hours to make sure we get that all out there so Steve can answer your questions. But we're just going to answer a few of the questions. Tony, did you want to go ahead and ask? I think there's a load of them here.
Okay, do you allow for do-it-yourself repairs?
Good question. Yes, we do allow for do-it-yourself repairs, but they need to be limited in nature, and the borrower needs to be a licensed contractor. They can't be a dentist and tell us that they want to do $100K worth of work. That's not feasible. We will allow, however, maybe a roofer who wants to put a roof on his own home. That's something we can allow.
So what you're saying is that contractor has to be, that homeowner has to be a legitimate contractor.
Correct.
To be qualified to do the work that they're actually looking to do.
Correct.
This is not like, my Uncle Lou is going to come over and fix my house for me. It's got to be a legit contractor.
Right. Uncle Lou, who does side projects, unpermitted, off the books, can't do work on a home.
Got it.
I guess we should give credit to those who are asking the question, so thanks, Steve, for that question. Julie from Minnesota asked the question, how do I get a copy of the Max Mortgage Worksheet?
That's a great question. We will send that to you after the call with the copy of the presentation.
Let's see. And how does a contractor get paid once the loan closes?
Another good question. So each program is different, but once the loan closes on a 203K limited, the contractor gets 50% of the bid amount at closing and 50% upon completion. On the other programs, the contractor gets paid through draws, meaning that they don't get paid until a certain level of work has been completed, right? So maybe they go out and do 20% of the work. They call up the HUD consultant. HUD consultant inspects the work and says, looks good, then we'll pay that contractor for the first 20% of work. And it repeats until all the work is completed. And we can do up to 5 draws.
I think maybe just one more question. I mean, we've already well over a half hour, so we're going to do one more question and answer, and then we'll end the call and make sure we get this Q&A out to everyone. Go ahead.
So, ask about, okay, HUD consultant fee reimbursements. How does that work?
Okay, so very simply, we can finance in any HUD consultant fees that are paid up front. So if we need a HUD consultant on a file and it needs to be paid for, as long as the borrower has the ability to finance into the loan amount, meaning the loan amount allows for it, and they want to be reimbursed, we just need them to sign a little letter saying they want to be reimbursed, and after closing, we can cut the borrower a check for that fee.
Great, that's great. So again, thank you very much, everyone that registered for this call and put up with us getting on a few minutes early. We really appreciate it. Again, working with the largest renovation lender in the nation is very important, again, on the pre- and post-closing piece. Reach out to your account executive, the email address that Steve put out there on the presentation. If you have any questions, we're more than happy to answer them, and we appreciate everyone's time today. So thank you very much, and have a great day, everyone.